we don't know what the Fed will do, but I would love to know what you think the Fed could do, part one, and and maybe reiterate the point. I don't know if you indeed believe that, but maybe reiterate the point that even if the Fed pauses, it's not a pivot, right? Because the fight against inflation, which has been embarked upon for the last 12 months, is here and is real, and inflation is not going down in the US. So the Fed may, even if it takes a pause right now, it is nowhere close to a pivot, I presume.
Certainly, because markets have discounted a lot actually in 1.5 days. The terminal rate, which for the Fed tightening cycle, which people expected, or rather the market expected, and was discounting at about 5.75, has already dropped down to almost 5.1. That's the terminal rate, right? So certainly, 50 basis points in the next meeting is off the table for sure. Markets completely, discounting that. Maybe 25 basis points, or maybe even a pause. That's what the situation looks like as of now.
Got it. So, Meir, is a buy the dip strategy to be implemented still some time away, or would you reckon that you, as such a large money manager, would be tempted to buy a dip if it were to extend itself from where it is right now, or would you wait?
I would certainly look at value because not all stocks have fallen the same. Broadly speaking, frankly, okay. Let me reword it. I think as far as the big sectors for India are concerned, IT and banking, both have fallen in tandem, more or less. So not much of relative value to kind of pick from. But stock specific, we can certainly look at. For example, certain real estate stocks are down 30%. So those kind of opportunities are there.
Okay, but you foresee, and again, who knows what will happen? I'm still trying to understand. Do you foresee in your heart that you would probably want to put big money to work only if the markets were to either show a time or a price correction, looking at all the things that are there right now: high inflation, low growth, this SVB issue, and what else? So would you wait for a particular valuation on our markets to come? I wouldn't call it levels, but particular valuation to come at our markets, or a time spent by these levels?
Yeah, I'm looking more at time and direction rather than absolute levels or even valuations. So I'd wait for more news to come in, discount that, and not be too fussy about absolute levels, frankly speaking.
Okay, and by value of just trying to understand, how does a large money manager like you think when you say that you're waiting for some news flow to come in? What could this news flow around be? Ceteris paribus, if other things remain constant, what is it that you would make you think that, okay, maybe this could be pointing towards the tide turning, if you will?
So lack of bad news in the next few days, incremental bad news itself would be a trigger. So if as I said, if there are no more cockroaches, then obviously that's one significant trigger. And the fact that bad news has come out and there have been some casualties in the global market means that the overall stance of central banks might actually be less hawkish than before. Not only the Fed, but even the European Central Bank and BOJ. So to that extent, I think the peak fear of tightening is already past us. And now it's a question of what the trajectory of incremental lack of tightening or incremental loosening should be. I think that's going to be important in the shorter term. And also we also will probably continue to monitor the physical data. So for example, even now, as of last Friday, the NFP payroll numbers was a beat, right? So the economic strength is still there, but with such a shock in the system, the Fed still might choose to get a bit less hawkish than before. So these are the kind of moving parts that we are looking at. So on one hand, the physical economy is telling you that things are still very hunky dory, but the markets are discounting a future slowdown, if not a recession. So we're kind of trying to grapple with that.